Welcome to the Daily Brief, where I'll go over the highlights for the action in the market for Monday, October 10th, and then we'll see how things look on a highlight basis for Tuesday, October 11th. And before I get going, there's a couple of notes just to quickly go over. I did attend a conference over the weekend sponsored by stockcharts.com. They tend to focus more on stock selection with the idea of buy low, sell high. And that's not the program that I do or that I teach, where I use all the other instruments that are available. So if we're going down, we can make a profit. If we're going up, we can make a profit. If we're going sideways, we can make a profit. But there was a good takeaway at the very end of the conference. A gentleman named Larry Williams, where if you've been involved in the markets for a while, you probably heard of him. And he has some research that suggests that any year that ends in two, so 02, 12, 22, so forth, they tend to start off pretty rough. And this goes all the way back into the 1800s. And he had the charts to back this up. And it shows that things started off that year pretty rough. We hit a low kind of late summer into the fall, maybe a little bit later. And then from there, we were able to launch up out of that and then go back into a pretty solid uptrend. Now, is that what's going to happen? But there's historical precedence that that has happened, and it's happened pretty continuously over the period of time. So it's just something positive to kind of keep tucked back away in our minds as we're going through things. Also, the posting schedule this week might be a little more erratic. If you've watched these videos for very long, I am a Seattle Mariners fan. I'm from Seattle. This is the first time in 21 years. They actually made it to the playoffs, and somehow they made it out of Toronto with some really miracle games if you're a baseball fan. Now they're on their way to Houston. Since I'm not living in the US right now, the games are on during the night. And so that's messing with my personal schedule a little bit. So I may be posting things a little bit different than what you're used to, but this is kind of an important thing to me. So just be patient with me on that. In fact, root on the Mariners if you can find yourself doing that. The bond market was closed on Monday because of Columbus Day and Indigenous Peoples Day. So let's go back and talk about what happened. We did have a lower open and a little bit up, a little bit down. It wasn't a real big gap. Prices did then move down, and we went to S1 at 3605, and then we fell even below that. So we broke 3600. As the day went on, we did see a rebound, but after we shot back up a little bit, we then moved sideways, pretty much going right into the close. We were down 0.75% on below average volume. We're negative technically right now. We could be getting to some oversold conditions right now, but we haven't. Just because we're oversold doesn't mean we have to stop at this point. We're right at support again with the S&P 500. Long-term support, very significant support. If we're going to get a bounce, it should probably happen about now. But if we break that support, things could turn a lot more negative because the fixation is inflation and interest rates. And there are some more rumblings coming out of Russia and the Russia-Ukraine situation that could always escalate and come in, have an impact on stock prices. But really, barring that happening or some kind of other event, it's inflation and interest rates. We're going to get the PPI. We're going to get the CPI. We're going to get retail sales this week. So there's some hefty economic data coming out that may give some support or justification to the markets to go either up or down. What are some comments? If you're familiar with Jamie Dimon, he's the CEO of JP Morgan Chase. And so when he talks, people listen, kind of like the old Merrill Lynch slogan. He said that the US will enter a recession in 6 to 9 months. Well, some people think we're already there. But here's the important part, and that the S&P could easily fall another 20% from where we're at right now. Now, is that what's going to happen? I don't know. We just follow the charts day after day after day. But a lot of people listen to him, and a lot of people put a lot of credit into what he says. You don't get to be the CEO of one of the biggest banks by being a fool. So, but we just have to follow what's happening on a day in and day out basis and see if that's how it plays out. We also had some Fed speak. Fed Vice Chair Bernard said, and I'm just going to read this as quoted: moving forward deliberately and in a data dependent manner will enable us to learn how economic activity, employment, and inflation are adjusting to cumulative tightening in order to inform our assessments of the path of the policy rate. Okay. Is that a pivot? It just means we're going to look at the data and decide, are we going to keep pushing rates higher? Or if the data really justifies us slowing down, we might be open to doing that. But this is not Fed Chair Powell saying this. That's the important person. But the market might take this to try to develop the sixth version of the Fed is going to start becoming more dovish. So we'll have to see. Treasury market was closed in Monday's session. We still have our yield curves inverted. They didn't update because the bond markets were closed. Sentiment is still showing extreme fear. We didn't have any economic reports that came out. Our trend is negative. The red line's on top. The ADX and the moving average are kind of right on top of each other. But since it is turning back up slightly, it is getting stronger and it's above 20. With the down day, our bias is negative, and the last number of days, our momentum continues to be negative. So what's our outlook? The technicals, they're negative, and they possibly are getting back to an oversold condition, specifically in the short term. We have the NFIB small business optimism. That's really the only thing coming out on Tuesday. The whole list of geopolitical events with Russia, Ukraine, I'm keeping an eye on that one. But the markets are really fixated on the inflation and interest rate scenarios, and then any more Fed speak, specifically from Chairperson Powell. So our scenarios, we have to go with the down one now. Everything's pointed down, and we've got a lot of headwinds, but we could be becoming oversold. So it's not like you can we're going down from here right now, because we're at support. We're becoming more oversold. So it's hard to really get into that one. We certainly cannot go up right now. We've seen no follow through price action to the upside, and our technical picture is pretty bleak right now. You might be able to justify sideways if having the ADX right on top of the moving average is okay with you. We are above 20, so it's suggesting that we're still in a trend, and the red line's on top. So that would be more with a negative bias behind the trend. So our conclusion, not hard to make. The S&P is negative, short-term negative, but could be becoming oversold. Intermediate and long-term continue to be negative. So thank you. Have a great day, and I'll post the videos just as soon as I am able to do so.